Okay, let's jump right in. We are stepping into a completely new era of investing. And you know, one thing is becoming crystal clear. Technology is changing the game for how wealth is built. We're talking about huge breakthroughs like AI and blockchain that are tackling the very problems that have kept most people from getting the kind of returns that were once just for the top 1%. So welcome to the Wealth 3.0 revolution.
But before we dive into the solution, let's start with the big question. You know, the one we've all probably asked ourselves at some point. Why do the rich keep getting richer? It seems like a simple question, right? But the answer is pretty complex. And it's the absolute key to understanding the incredible shift that's happening as we speak. And that incredible shift, well, it has a name. The Wealth 3.0 revolution. And this is way more than just a buzzword. It's a movement, really, a technology-driven movement that's finally starting to level the playing field in the world of investing.
Now, this isn't just about slightly faster computers or some slick new app on your phone. No. We're talking about a fundamental overhaul of the entire system. It's all being powered by tech that is literally breaking down old barriers and opening up brand new possibilities for everybody. So what this is really all about is giving the 99% a real shot, a genuine opportunity to build wealth in ways that were, frankly, impossible before. But to see just how big of a deal this is, you first have to understand why that gap between the 1% and everyone else even exists. To really get the power of this revolution, we need to pull back the curtain and see exactly why that gap exists in the first place. So, let's break down the mechanics of why the rich get richer. You see, this gap didn't just pop up overnight. If we go back to the 80s, we had what you could call Wealth 1.0. Everything was on paper, actual stock certificates, physical bonds, and getting access was super exclusive. Then, starting in the late 80s, Wealth 2.0 came along with digital technology, the internet, mobile phones. They gave more people a way in. But a funny thing happened. The rich just got even richer. And the numbers, well, they tell the story loud and clear. High net worth individuals consistently pull in annual returns that are at least 50% higher. So if the average investor is making about 8%, the top 1% are clearing 12%. Now, that might not sound like a huge difference, but believe me, over time, it is an absolute game changer. It really all comes down to that 4% performance gap. Doesn't sound like much, does it? But that tiny difference is the fuel that creates a massive canyon in wealth, all thanks to the incredible, unstoppable power of compounding. Just how massive are we talking? Well, after just 20 years, that 4% difference means the portfolio of a top 1% investor is double the size of an average investor's. Double! Just let that sink in for a second. And if you think that's wild, what if we stretch that out to 30 years? Now their portfolio is triple the size. This just shows you, plain as day, how these small, consistent advantages can lead to absolutely life-changing differences in wealth.
So what's behind this gap? Well, it really boils down to two main things. First, there's the access gap. The 99% have historically been locked out of the best performing stuff, alternate assets like private equity. And second, you've got the advice gap. Most people just don't have access to professional, unbiased financial strategy because it's always been seen as way too expensive.
All right, so we've laid out the problem. It sounds a little bleak, right? But this is where the story gets really interesting. Technology is now stepping in to close these gaps, and maybe for good. And here's exactly how tech is tackling both problems head-on. To fix the access gap, blockchain gives us something called fractionalization. Okay, so think of $1 million investment, like a piece of a private company. Blockchain can digitally slice it into thousands of tiny, affordable pieces or tokens that anyone can buy. Poof! The exclusivity is gone. And for the advice gap, AI-powered robo-advisors can act like your own personal financial strategist, giving you sophisticated, data-driven advice for a tiny fraction of what a human advisor would cost. But look, having these powerful new tools is really only half the battle. To actually win, you have to pair them with the same timeless principles of smart investing that have always worked. The technology is new, but the winning strategy, that stays the same. The fundamentals here are absolutely non-negotiable. First, you have to resist that urge to time the market. Panic selling almost always means you miss out on the best days. Second, you have to invest consistently. History has shown us again and again that diversified portfolios beat just holding cash. And finally, focus only on what you can actually control. Things like your fees, your taxes, and your own personal strategy. I mean, the historical data here is it's undeniable. When you look back over 120 years, diversified portfolios have consistently crushed just holding cash. As you can see, stocks and bonds have been the real engines of long-term growth. The clearest lesson from all of history is that time in the market is so much more important than timing the market. And at the end of the day, the most brilliant, complex strategy in the world is totally useless if you ditch it at the first sign of trouble. It all comes down to a really simple truth. The best portfolio is the one you will actually stick with. Being honest with yourself about your goals and how much risk you can handle, that, plus a little discipline, is way more important than chasing the latest hot trend. So let's bring this all home and look at what this all means for the future, and more specifically for your financial future.
If you take just one thing away today, let it be this. Wealth 3.0 isn't really about the cool new tech itself. It's about finally getting the 3 things that everyone needs to build real, lasting wealth. Access to better investments, a sound strategy to follow, and the guidance to see it through with confidence. The tools are here. The access is opening up. That gap we talked about is finally starting to close. So the only real question left to ask is this. With this revolution already happening all around us, how will you position yourself for the next decade of wealth?